Hey guys, what's going on? My name's Jonathan Reich. I'm a licensed CPA in the state of Louisiana. And as a licensed CPA, I find myself intertwined with all things personal finance, business finance, tax related. Basically, I get more than I deserve when it comes to kind of peeking behind the curtain and seeing how things work. I'm not a certified financial planner or anything like that. I just seem to know a little bit more about how money works, how money moves than the average person, and that's enough for all kinds of people to ask me all kinds of questions. And so I always try to do my best and give the best answer I can. So I usually end up educating myself and trying to at least give them something that halfway resembles the correct answer. And so some of the things that we've been talking about as of late, because it's April 6th, 2026, and it's the end of tax season, some folks are getting refunds and they're asking about high yield savings accounts, how to compare interest rates, how to find good accounts, stuff like that. These are folks who, maybe they're a little older, their retirement accounts are funded, they're in a good financial position, and so they want to have a little bit of money that can just be a hedge against inflation that's not necessarily sitting in the market, sitting in bonds or anything like that. So before we can talk about how to find these good high yield savings accounts with these good rates, we need to talk about what goes into, making a good high yield savings account. For instance, what's the difference between interest rate and APR? Well, I kind of already got that loaded. That's a loaded question. So I've got ChatGPT here open in the background, ready to answer some of those for me. So basically, the APY is going to have the compounded returns calculated into it. So I would say the APY is really truly a little bit lower than what you'll find with the interest rate. And here's an example. So I prompted the difference of a high yield savings account with $100,000 in it and told it to calculate a 10% interest rate compounded monthly and a 10% APY compounded monthly. You can see here, if it's a 10% interest rate, it's pretty straightforward. Compounded monthly, you'll have $110,470. Now, a lot of you would say, wait a minute, shouldn't it just be $110,000? It's 10%, 10% interest for the year compounded. Well, the compound is the key part. It compounds every month, so it builds and builds and builds a little bit to where you actually end up with $110,471. It can be really confusing for folks who aren't in the finance world, who maybe don't toy with this all day, every day. But if it compounds monthly, you just end up with a little bit more. But if your annual percentage yield is 10%, then it's $110,000. So you missed out on $471. And it can get even more complicated and convoluted than, imagine if you're using random amounts, compounding daily, monthly, quarterly, annually. Maybe you're doing it over a period of 8, 10, 40, 50 years, just stuff like that. So it can really get tricky. And so one of the other things where people slip up is how often it compounds and what that compounding does, because that compounding builds upon the next time that the interest compounds. So I prompted it. I said, let's say I have $100,000 in a high yield savings account. I have the option for it to compound daily, monthly, or annually. Which should I choose? Obviously, you're going to want to compound daily. It's going to give us an example here. So at 5% interest on $100,000 for a year, changing nothing, changing no interest rate, not the time period, not the amount, just changing how frequently we run the operations on a smaller amount at 5%. This would be much larger if it was 10%. You come out with $126 difference over if you had compounded annually. So yeah, that doesn't seem like a lot, and it's not necessarily in this case, but imagine if you're dealing with millions, or imagine if you're dealing with significant interest rates of 8 to 10%. It can really start to run away quickly. So just little nuances like that. There's also things like rate tier requirements or minimum balances. We want to be able to find good high yield savings accounts that don't necessarily bury the important information behind paywalls or tons of articles. So there are different tools out there that you can use to find a good high yield savings account that can help kind of cut through a lot of this smoke screen so you can get the information you need. I've got a couple here on the screen today. NerdWallet's a big one. Best Money is another big one. Best Money, if you want, let's go ahead and jump in and I'll show how they kind of sort all this out. So a little bit about these sites. Let's see, give me 1 second. Let me answer these questions. We're looking for savings accounts. A little bit about these sites is they're basically aggregators. So the businesses, the banks who hold these accounts, who hold these credit cards, who hold these mortgages and loans, basically say, hey, Best Money, if you can get us a referral, we'll give you a small cut. We'll give you a fee. We'll give you X dollars per lead, whatever. That's how they all make money. So Best Money is not actually giving you the savings account. Best Money is basically the middleman to connect you, the buyer of the service, essentially, to the bank. And the bank says, okay, thanks Best Money, here's a little bit of money for your trouble, for your work, for your services, and away we go. That's how every single one of these aggregator sites makes money. That can be Bankrate, NerdWallet, the Points Guy, Best Money. It's how it works. Now you want to be careful to make sure that you are truly getting the best interest rates, savings rates, stuff like that. You need to be sure to watch out for the fact that the sites are being paid by Citibank and Amex Savings and SoFi. So, for instance, if SoFi says, hey, Best Money, I want to be number one, SoFi can write a large check. And I'm not necessarily calling Best Money out for this, but they all kind of do it a little bit. The more funds that the banks push these aggregator sites, maybe the higher up the ranking they move. And so you have to be careful with that. But Best Money does a really good job of helping to really showcase the things that are important when you're looking for a high yield savings account. So we can hit here and click view rates, or it's going to give you the information up front that you need. So earn 4% APY, 3.75% APY, $0 monthly fees. You got to watch out for things like that. You want to make sure that whoever you're using is being transparent. Limited time, it's only for a limited time. For instance, for 6 months, 4%, terms do apply. I really appreciate that's transparent up front. You want to make sure that you're not getting hit with a teaser rate, or you have to have a minimum balance, or you have to have a credit score of 720. You want an aggregator that's going to show the options, that's going to allow users to compare APYs, fees, minimum balance requirements, and you can do that just by drilling in and seeing. So let's see what SoFi wants, if it'll load promptly while I'm on camera. So earn up to 4% APY, $400 with your first direct deposit. It's going to show you everything. It's right here on the flyer. It's pretty transparent. I like that. Let's see. Let's pick another bank. Synchrony Bank is a large one. We'll jump into there. So we can help by showing you your competitive rates. Let's see, 3.5 APY, but you got to watch out. They got that little star right there. So you need to come down here and say, well, what's the catch? Let's see if we can find it. It's usually all the way at the bottom, and disclosure. So make sure you read the disclosures. Most of the time they're not hidden. You just have to know where to look for them. And so Best Money is a really good aggregator that kind of keeps things transparent. They do have a whole host of different banks to choose from. They have a ton of choices. And they also offer things that just aren't high yield savings accounts. They have credit cards, life insurance, mortgage, etc., stuff like that. NerdWallet is no different, except they typically give you a little bit more of that financial backbone, for instance. So let's say you are just naive. You don't know what you don't know. And some of the things I was showcasing with ChatGPT earlier, you had no idea existed. You don't know the difference between interest rate or APY or APR or any of these other acronyms that are starting to sound really confusing. And you're interested in opening up a high yield savings account because maybe you've had a good tax return, or you want to start building an emergency fund or something like that. So, or maybe you're interested in learning about CDs. I mean, all kinds of things. So let's click on savings account. Let's click on the best high yield savings account. You can see how the platforms look pretty similar. They're going to tell you what the APY is. You need to be on the lookout to see if they're comparing APY to interest rate. And then you can just drill in. You can see SoFi and Capital One and Amex were all on Best Money as well. A lot of these banks are going to be similar. Citibank was on Best Money. They just might be in a slightly different order. And then you just need to go through the fine print and see who's gonna be able to differentiate those high yield savings accounts and the disclosures. The reason I wanted to put NerdWallet as a good comparison, because NerdWallet does a really good job of showcasing like resources tied to this. So they don't only push what they sell, what those aggregators are trying to get, which is customers to banks, to customers to insurance agents, stuff like that. NerdWallet does a really good job on essentially educating, and so I wanted to include them on this video. So if you do have questions, you can look at like Investopedia or NerdWallet. Just be careful when looking at NerdWallet though, because if it's a paid or sponsored piece, the whole picture may not be there. So anyway, guys, there's plenty of other sites out there that act as aggregators. My 2 cents is pick one that's transparent, it's upfront, it showcases, APY, the rate, the terms, the disclosures, who the bank is, things like that, and you'll be okay. You just need to kind of educate yourself a little bit, and watching this video was a good first step for that. So I hope you guys enjoyed the content. I hope you learned something, and I will see y'all on the next video.